Good afternoon, class. We will continue our discussion on bonds payable. So last meeting, we ended on the um, initial measurement of bonds if the bonds has transaction costs. Okay, so what will happen if we have transaction costs? So yun yung up to that topic tayo last time. And then we also discussed yung trial and error approach of identifying the effective interest rate. Okay? So if you do not have any question on this part, we will continue on the next slide, issuance of bonds between interest payment dates. Okay? So issuance of bonds between interest payments dates, so meaning the bonds was issued, for example, the date of your bond is January 1 and the payment of interest will be on June 31 and December 31. May 31 ba ang June? Okay, June and December ang payment ng interest rate. So if the date of your bond is January 1 and then you issued your bond on March or let's say April. Okay? So, ibig sabihin, in-issue nyo yung bond on April. So, meaning, you will have an accrued interest from January up to March, assuming April 1 yung in-issue yung bond. So, you will have an accrued interest from January because the date of the bond is January, accrued interest from January up to March. So how are we going to recognize the accrued interest? Okay? So sabi ng standard, we have the accrued interest prior to the issuance date is not included in the initial measurement of the bonds. Rather, credited to interest payable or interest expense. So meaning, hindi dapat siya kasali sa carrying value ng bond on initial measurement. So kung yung payment made by the investor includes the payment for accrued interest, then we have to deduct that accrued interest. Pero kung hindi naman included, separate yung amount for the accrued interest, then hindi natin siya i-add. Basta ang sinasabi ng standard, ang magiging carrying amount of the bond at initial measurement should not include the accrued interest. Okay? So next, the interest expense recognized, sinasabi niya, the interest expense that will be recognized should be the interest expense only from the date of issuance up to the date of maturity. Okay? So, ang i-recognize lang dapat na interest expense in relation to the issuance of the bonds will be the interest expense from the issuance date up to the maturity date of the bond. So, we are not going to recognize yung interest expense prior to issuance. So pre-issuance interest is not recognized as interest expense. Okay. So yun. So let's have an example. We have on April 1, the company issued 12% 1 million bond dated January 1 to 2020. So ang date ng bond is January 1. So meaning from January 1 up to end ng March, meron tayong accrued interest. meron ng interest na nag-accrue. Interest payable yon sa part ng company. Okay? Kasi yung company ang nangungutang. So the bond is issued at 95, including the accrued interest rate. Ibig sabihin, kasali sa price na binayaran ng investor, yung accrued interest. So sinasabi ng standard, we should not include the accrued interest on the initial measurement of the bond. So anong gagawin natin? To compute for the initial measurement of the bond, carrying amount of the bond on initial recognition, meaning the date of issuance, since yung 970,000 includes the accrued interest, we are going to deduct 30,000 to get the carrying amount of the bond. So the carrying amount of the bond will be 940,000. Okay? So, yun yung sinasabi ng standard. Pero kapag kasi kanina sa previous class, tinanong nila bakit iba daw yung sa book ni Valix, and then kaya iba kasi yung may example si Valix na yung accrued interest is not included. Ibig sabihin, excluded yung accrued interest sa price ng bond. So, kung excluded na siya, hindi mo na siya kailangang i-minus. Pero tatandaan mo, hindi mo dapat siya i-add. Okay? Kasi excluded dapat siya. Hindi dapat siya kasali sa carrying value ng bond. So, kung yung kanina sa previous class, sinabi ko sa kanila na ang susundin natin if ever silent ang problem, excluded. So, ang susundin natin is excluded yung accrued interest. Okay? So, paki-check dyan sa libro ninyo yung sinasabi ko. Okay. So, that is the computation of the carrying value at initial measurement. So, to recognize, to record the transaction, we have i-record natin yung cash na natanggap natin from the investor. So, ang binayad ng investor is 97. So, 970 yung natanggap mo. Okay? And then, ang liability natin, bonds payable again at face value 1 million. Okay? How are we going to compute for the interest expense or interest payable? This is actually an accrued interest. Diba, ang accrued interest is a liability account or interest payable. Pero sinasabi dito, pwede na daw natin gamitin yung interest expense account. Kasi credited siya dito, meaning ma-offset siya doon sa debit balances ng interest expense. Kasi dapat ang maging effect niya is hindi siya kasali sa total interest expense na babayaran ng company. At total interest expense na i-report ng company over the life of the bonds. Okay, so kung kin-credit mo yung interest expense, ma-offset siya doon sa mare-recognize na interest expense or debit balances na interest expense. Pero kung ayaw mo naman, that is for shortcut method or yun, mas madaling mas madaling way pero mas nakakalitong way. Pero kung ayaw nyo malito, gamitin nyo na lang yung interest payable para malaman nyo na yun yung accrued interest rate, interest expense. Okay? So, how did we get 30,000 accrued interest? Okay, that is 1 million times the nominal rate na 12% since annual yung ating bonds. 3/12. So, i-divide nyo ng 12 months times 3. So, that is the accrued interest for 3 months. 30,000. So, yung yes.
Bakit 3 months?
3 months? Bakit 3 months? Yun ang tanong mo? That is, ang counting mo ng months ay mula January 1 hanggang end ng March. Kasi, ito. Date ng bond is January. Ibig sabihin, dun sa face ng bond, ang date niya is January. Pero inisyo mo siya April. Okay? Ibig sabihin, from January, February, March, meron ng nag-accrue na interest. This is January 1, January 30, tapos hanggang February 30, tapos March 30. Dito pala dapat ang April. Tanggalin natin to. Sandali. Ayan. Okay. So this should be 3 months. Mula January 1 up to April 1. So 3 months. So yan yung total months na naglapse bago na-issue yung bonds. So, between interest payment. Kasi kung in-issue mo siya ng interest date, then hindi ka magre-record ng accrued interest. Bakit? Kasi interest date, nagbayad ka doon ng interest. So, walang accrued. Okay? Pero dahil between interest payment date siya, meron pang outstanding interest na hindi nababayaran. So, yung outstanding interest na yun yung accrued interest. So, that is 3 months. Kaya 3 over 2, 12. Yun nandito. Okay? Okay na ba?
Yes, ma'am. Thank you.
Okay, sige. So, yun. Sinasabi ng standard, we are not going to include the interest, accrued interest sa carrying amount ng bond. That is why dinidak natin siya dito. That is why, bakit ulit natin siya dinidak? Kasi sinabi ng problem, included siya dun sa 9.7. Okay, so dinidak natin. Pero kapag sinabi niyang excluded, of course, hindi mo na i-deduct. Pero hindi mo rin i-add kasi dapat hindi siya talaga kasali dun sa carrying amount ng bond. Okay, so pag silent ang problem, again, ang napag-usapan, excluded. Okay, excluded yung accrued interest rate, interest expense. So to determine the discount on bonds, this is kung ito yung carrying amount ng bonds mo na walang accrued, compare mo doon sa face value niya, the difference is your discount. That is why ang discount natin ay 60,000. Okay, 1 million minus 940, 60,000. Okay, so that is for bond issued between interest payment. Any question? Wala? Okay, so if you do not have question, let's proceed to the subsequent measurement ng bonds. So, ang bonds is measured at amortized cost. Subsequently measured at amortized cost. Okay? Sabihin, ina-amortize natin yung bond. Hindi kasi siya held for trading. Hindi siya for trading. Or hindi siya true profit or loss. So, kung hindi amortized costs yung way ng measurement, subsequent measurement, ibig sabihin, yung financial liability is either of the following, from A to E. So, itong from A to E, pakibasa na lang, these are the financial liabilities which are not measured at amortized cost. Pero yung bonds natin is at amortized cost. Okay? Another one, the company is also given the option to designate a financial liability at fair value through profit or loss. So, ito yung provisions ng standard kapag dinesignate mo daw, kapag napag-alaman mo na mas relevant yung information, kapag ang ginamit mong method is fair value through profit or loss, then you can designate fair value through profit or loss during initial recognition. But that will be irrevocable. Hindi pwede na papalit-palit ka ng method. First year, fair value. Next year, naisip mo amortize. Next year, fair value. Hindi pwede yon. Okay? Dapat may reason ka kung bakit nagpapalit ka ng accounting method or bakit mo pinili yung fair value method kung ang default is amortized cost. So ito dapat, one of the reason mo dapat is yan. Kung na-identify mo na mas magiging relevant yung information kung yung fair value ang gagamitin. Okay? Then these are the other provisions of the standard. Okay, so let's have sample problem for accounting for bonds, initial measurement, and subsequent measurement. Okay, so we have the company. The company wants to expand its business. So to finance that expansion, the company has to raise capital. So ang ginawa nila, nag-issue sila ng stocks, and other than that, the board of directors approved the issuance of 5 million, 8%, 5-year bonds in 2020. So the interest paid would be paid semi-annually. That is on June 30 and December 31. So sabi niya dito, the bond is callable. Meaning, the company can call the bond and retire the bond even though uh, hindi pa nag-mature or hindi pa maturity date. So the bond can call the issuer and pay or redeem the liability, the bonds pay, the corporate bond even prior to maturity. So kapag ka ang option naman ay yun ay kung yung corporation ang magko-call or magre-retire before maturity. Okay? Pero kung yung holder ang pwedeng mag-retire ng bond, ibig sabihin pwede niyang dalhin kay corporation and pabayaran na niya although hindi pa maturity date, ang tawag doon is putable instrument. So yung mga putable instrument, okay, the holder has the right to return or put back to the issuer the instrument in exchange for cash and other financial asset, or is automatically put back to the issuer upon the occurrence of specified future event such as death of the holder. So yun yung putable instrument. Okay? Nasa discretion ng holder yung retirement ng bond before maturity. Pero kapag callable, ang discretion na kay corporation. Pwede niyang i-call and then i-retire niya prior to maturity date. Okay? So this 104, ay ma'am. So this 104 is the price that will be paid by the corporation once na kinol niya yung bonds. Okay? Ito yung magiging price na babayaran niya. On January 1, the bond were sold at 96. Okay? Okay, malilito, itong 104, this will be the callable price or yung price na babayaran ng company kapag kinol niya yung bonds. Noong January 1, ang quoted price is 96. So the bonds were sold at 96. So ito yung gagamitin nyo for initial recognition. Okay? To identify the carrying value of the bond at initial recognition. So 'di ba sabi ko last time, kapag binigyan kayo ng quoted price and effective interest rate, ang gagamitin nyo will be the quoted price. Gagamitin nyo lang yung effective interest rate kapag hindi binigay yung quoted price. Okay? So, the company decided to amortize the bond using effective interest rate. Okay? And then, on July 1, 2022, ni-retire niya yung half. Okay? So, we have here, given natin, we have the face value na 5 million. We have the nominal interest rate na 8%. I-divide natin ng 2 kasi semi-annual ang payment ng interest. So, ang market interest rate, this will become our effective interest rate, 9%. So, divide 2 because the payments are made semi-annually. Okay, maturity period is 5 years but we pay interest twice a year. So, multiply by 2, you have 10 interest payments. Okay. Then the price of the bond, that would be the quoted price, the 96, multiply by the 5 million of face value. So 0.96 times 5 million, you will get the carrying amount of the bond on initial recognition na 4,800,000. Okay. So to record that transaction, you have cash Ang na-receive mo is 4,800,000 dahil the bond was issued at a 96 quoted price. Okay? And then, the liability, re-record mo, credit, 5 million. The difference between 5 million and 4,800,000 will be the discount on bonds. So, that is 200,000. Okay. So that is for the initial measurement. Okay. How about the amortization? So, i-amortize natin yung discount and magbabayad tayo ng interest every June 30 and December 31. So, i-record din natin yung transaction na yun. Okay, so interest payment, for example, on June 30, babayaran natin yung interest expense. How did we get this 260 na interest expense? This is the carrying value multiplied by the effective interest rate. So your interest expense is composed of both the amortization of the discount and the actual interest paid. Yung actual interest paid is based on the nominal interest. Okay, so that is the nominal interest multiplied by the face value of the bond. That is the actual interest or yung actual cash flow na babayaran ng company. So, kaya mas malaki yung interest expense kaysa dun sa actual cash actual cash na binayad mo for interest is because meron pang amortization ng discount. Okay? How are you going to identify how much of the discount on bonds payable is to be amortized during that year? So to get that one, you have to compare the interest expense with the actual interest paid. Okay, so the difference between the interest expense and the actual interest paid is your discount on bonds payable. Okay, again, the interest expense is computed using the effective interest rate. Yung interest payment was computed using the nominal interest rate. So take note of that. Okay, so next. So for as of June 30, the carrying amount of our bond will be 4,816,000. How did we get 4,816,000? I-add back natin doon sa carrying value niya yung na-amortize na discount, which is 16,000. Kasi kung mapapansin mo, how do we compute for the carrying value of the bond? So we have the face value. Okay, we have the face value less the unamortized discount, di ba? Less the unamortized discount. Oh, unamortized discount yan na. Equals to the carrying value. So dahil na-amortize mo yung discount, mababawasan yung ibabawas mo dapat dun sa face value. Okay? So for shortcut method, i-add back mo na lang yung na-amortized. Kasi kung ganito yung way mo ng pag-compute, i-identify mo pa muna kung magkano yung natirang unamortized. So that is yung unamortized last time minus the amortization. Oh, tapos saka mo ima-minus dun sa face value to get the carrying amount. So that is the long way of computing the carrying value. But you can do it by just adding the amortized discount to the previous carrying amount of the bond. So mas simple, kumbaga mas shorter yung ganitong computation. Okay? Then we have here, this is for December 31. So for December 31, you have, okay, ang magiging basis ng computation natin for the effective interest or interest expense will be the carrying amount niya. Of course, itong carrying amount dito, yun yung i-carry over mo dito. Okay? So that will become your basis for computation ng, sorry, Ito. Dito. Ito, interest expense. Ito. This will become your basis to compute the interest expense. So, ito ngayon yung total interest expense. Okay, ito. Itong nandito sa June. Tama ba? Ito. Okay, this is the... Wala dito yung journal entry. This is not the entry. Entry to ng June 30. Okay, let's go to the next slide. Nandito yung amortization table and the other journal entries. So, this is the amortization table. Kapag binibigyan kayo ng problem, pag nag-quiz kayo or nagsisit work, nagtitest, usually, ang tinatanong ng problem, how much is the carrying amount of the bonds payable? For example, on December 31, 2021. That is the first question. Then, second question, how much is the total interest expense on June 2022? Or how much is the amortized discount? So, yun yung mga tinatanong usually ng mga problems kapag nagtitest tayo. So, it's better for us to prepare an amortization table kung kaya, kung may time, kaya ng time. Kasi para hindi tayo nalilito. Pero kung kaya nyo naman na compute lang without the amortization table, okay lang din. Pero kasi kapag meron kang amortization table, nakikita mo ng maayos yung balances. And ma-identify mo na tama yung amortization mo kasi at the end of the period, for example, ito na yung maturity date. This is not the maturity date, up to the ano lang kasi yung nilagay ko dito. Up to the time ng retirement. So, ni-retire yung kalahati on July 1. So, ang amortization natin up to end of June lang. 2020. So, you will know na tama yung pag-amortize mo kapag yung maturity date, dapat yung carrying value should equal to the face value. So, kung 5 million ang face value, dapat ang carrying value ng bond mo at maturity date should be also 5 million. Equal dapat siya dun sa face value. That's how you can tell na malapit sa tama yung amortization mo. Or kung hindi man siya tama, malapit siya sa tama. Parang ganun. Okay, so this is your amortization table. How do we identify the interest expense? Interest expense is the previous carrying amount multiplied by the effective interest rate. Okay, so this is the composition of this one will be the interest paid and the amortization of the discount. The actual interest paid is computed by multiplying the nominal interest to the face value of the bond. So equal 200. Okay? So every interest payment date, nagbabayad ng company ng 200 na interest. Ito yung actual cash outlay at actual cash outflow for interest payment. Okay? Mas malaki yung interest expense. Bakit? Kasi other than the interest payment, dinadagdag din natin dyan yung amortization ng discount. And the amortization of the discount, amortized value of the discount is determined by comparing the interest expense with the interest paid. So yung difference nila will be the amortization of the discount. So to determine the carrying value of the bond, for example, on June, dahil nag-amortize tayo ng discount, i-add back natin yung sinabi ko kanina. Yan, to get the 4,816,000. And that is also true with the other succeeding dates. So that's how you amortize the bonds. So to record the amortization and payment of interest, so the-debit natin yung interest expense, credit yung amortization ng discount, and then the cash paid for interest, credit. So, ganyan yung journal entry natin. Up to June 30. Okay? So, okay, before we go to yung sa call, yung pag-retire ng bond. Let's look at this muna. So, wala kayong magiging problema kung yung bond was retired at maturity date. Ang magiging entry nyo lang is debit nyo yung liability, which is bonds payable, tapos i-credit nyo yung cash. Okay? Kung yung retirement price is equal with the face value of the bond. So, wala kayong magiging problema. Pero kung yung bond, kasi kung for example, kung i-retire mo kasi yung bond prior to its maturity, kung i-call ng corporation yung bond before its maturity, kung ako yung investor, ako yung holder nung nung bond na yon, hindi ko kikitain, on my point of view as an investor, hindi ko nakikitain yung mga possible na kikitain ko na interest until mag-mature yung bond. Kasi nga, binabawi na siya nung corporation kahit na hindi pa siya nagmamature. So, it is only appropriate, it is appropriate, tama ba ang term ko? So, tama lang na ang ibabayad ng corporation sa akin to retire the bond prior to maturity should be higher than the face value. Kasi unfair naman sa akin on my part as an investor, na-expect ko, nakikitain ko pa sana yung interest. Okay? Kung up to maturity date niya i-retire. Sa maturity date niya pa i-retire yung bond. Pero dahil gusto na niya i-retire ngayon, then the corporation will pay me a price that will be higher than the face value of the bond. So kung mapapansin nyo kanina sa problem, ang retirement ng bond will be 104. Okay? So may excess na 4. Kasi to get that price, you are going to multiply 1.04 times the face value. So may excess na 4. Okay? So ibig sabihin, yun, mas mahal yung bayad for retirement. Imbes na yung face value lang ang babayaran, meron pang na-incur na loss. Kapag mas malaki yung binayad mo as a retirement price compared sa face value ng bond, then the corporation will recognize a loss on retirement. Okay? So when the bonds are retired, any difference between the retirement price and the carrying amount, you are going to identify first the carrying amount of the bond sa date na ni-retire mo siya. Okay? So anong ibig sabihin nun? Lahat ng discount or premium that should be amortized up to the date of retirement. So, i-amortize mo muna yung discount or yung premium up to the date of retirement. Okay? To identify yung carrying amount niya sa date of retirement. So, yung carrying amount na yun ang i-compare mo dun sa retirement price to determine kung magkano yung gain or loss. Kung mas malaki ang retirement price, ibig sabihin, mas malaki yung binayad mo compare sa utang, actual balance ng liability mo. So you will have to recognize a loss. Okay? Pero kung mas malaki naman yung utang mo compare sa binayad mo, ibig sabihin ng outstanding balance mo, for example, 1 million, pero ang binayad mo lang is 900. So the difference will be recognized as gain. Okay, so both gain or loss on retirement will be reported in the statement of profit or loss or yung ating income statement. Sige, let's continue the example problem. Okay, so assuming the company called the bond, ni-retire niya yung bond, ang magmamature yung bond after 5 years pa, 'di ba? Pero kinol na niya yung ban noong July 1, 2020. 2022. That is after how many years? 2.5? 1.5? 2.5 years. Okay, so prior to maturity. So, ibig sabihin, itong call price niya, ito yung magiging retirement price natin. Yan yung ibabayad ni corporation doon kay holder ng bonds. Okay? So, sabi natin, dapat i-amortize niya muna. Okay? dapat i-determine niya muna kung ano yung carrying amount ng bond sa date of retirement or date of call, for example. So, di ba, noong July 1, doon sa amortization table natin, yung carrying value na nandoon for June 30, yun yung carrying value, of course, ng July 1, di ba? So, kalahati lang daw yung ni-retire. So, ibig sabihin, divide 2, kalahati. So, yun yung carrying value ng i-retire natin for July 1. Hindi kayo magkakaproblema dito kasi ni-retire niya within the interest payment date. So, walang accrued. Okay? So, yun, ni-retire niya yung kalahati. Other way of determining, ito yung remaining balance ng ating unamortized discount. Okay, so bakit ko nilagay yan dyan? Kasi other way of determining the carrying value is you have your face value less the unamortized discount. Okay, so face value is 2 million, that is 2,500,000, that is half of the 5 million kasi nga sinabi niya the management retired half lang, half. Okay? So kalahati ng 5 million. So ililess mo dyan yung outstanding balance ng discount para makuha mo yung present value or carrying value ng bond nung as of July 1, 2022. Okay? Pero pwede din naman na kung nagawa mo na yung amortization table mo and you have this amount, pwede na diretso mo na divide 2. Okay? So you will get the carrying amount na 2,443,765. Okay, so you are going to compare this one to the price or retirement price. The retirement price is 104, yung quoted niya. So that is 1.04 multiplied to the face value of the half of the bond kasi kalahati lang ni-retire. So ibig sabihin, ang babayaran ng corporation is 2.6. Pero ang carrying amount lang ng liability is 243,765. So, yung difference, dahil mas malaki yung binayad natin compare sa carrying amount, that will be a loss. Okay? So, ang journal entry natin during the retirement will be debit. Of course, you have to cancel out the liability, kaya di-debit natin yung bonds payable. I-credit natin yung related unamortized discount. And then, i-credit din natin yung total cash na binayaran natin. Okay? To retire the bond. Then, the difference, we identified here how much is the loss. So, debit yung loss on bond retirement.
Ma'am?
Yes?
Ma'am,
May tanong?
saan nakuha yung 87,531?
Saan? Yung?
87,000.
Ito?
Yung i-minus po sa 200.
Ito yung 50.
Hindi
Yung
po.
giminus sa...
87,000.
Ito. Ito yung total amortized. Ito, sige, balik tayo dun sa amortization table. Ito. I-add mo hanggang dito. Sige man, try mo man yan i-add. Yan yung total amortized discount. So, that is 16,000, 16,720.
Yes, ma'am.
Okay? So, yun. So, kung na-amortize mo na yung 87, ibig sabihin, ang unamortized na lang or yung hindi pa na-amortize ay 112,469. That is for the whole bonds. Pero kalahati lang kasi that is why pagdating dito, dinivide natin ng 2. Kaya 56 lang. Okay, sige. May tanong pa? Wala na. Okay, sige. So, that is for the retirement of bonds prior to maturity. Then next, we have serial ban. Ano naman yung serial ban? Kapag yung ban pays principal, meron tayong principal payment, okay, on installment basis. So, ibig sabihin, nagbabayad tayo ng portion of the uh, outstanding balance of the bond is being paid on an installment basis. Ibig sabihin, hindi natin hihintayin yung maturity period para bayaran yung bonds. Okay? Unti-unti siyang binabayaran through installment. So, meron tayong periodic payment will include both the payment for interest and principal. Okay, so meron tayong example dito para mas maintindihan natin. So, the company issued 10%, 3 million bonds for 2,900,305. So, this is the price of the bond. So, binigay na niya sa atin yung carrying value ng bond at initial measurement. Okay? So, the principal mature in 3 equal annual installments. So, every year, nagbabayad tayo ng principal ng bond. So, equal daw, sabi niya equal. So, you will have an equal payment for 3 years. So, that is 3 million divided 3. So, you have an equal payment na 1 million each year. So, that will be payable each year end. Other than that, of course, magbabayad din tayo ng interest. Okay? Interest on the outstanding. So, ang babayaran mo lang na interest will be the interest nung hindi pa bayad na balance nung bonds. Of course, hindi na magkaka-interest yung part na nabayaran na. Okay? So, later makikita natin kung paano yun. So, we have the effective interest rate na 12%. So, yung effective interest rate, we are going to use that one to identify the carrying value of the bond kung hindi ito binigay. Pero dahil binigay na siya, okay na. Wala na tayong problema. So you are only using this 12% to identify kung magkano yung interest expense. Kasi interest expense will be 12% multiplied by this carrying value. Okay? So for initial measurement, dahil hindi na natin i-compute yung carrying value as given na siya, so you have the price of the bond, so you are going to be paid 2,900,305. Then the bonds payable, face value 3 million. The difference between the face value and the purchase price of the bond is the discount on bonds payable. So, mapapansin nyo, mas mababa yung carrying amount niya kaysa sa face value niya. Diyan pa lang, alam nyo na discount. Dito pa lang actually sa interest, mas malaki yung effective interest rate compared sa nominal rate. So, discount. Issued at a discount yung bonds. So, this is the future payment. So, before you look at the amortization table, focus muna kayo dito sa first table, yung future payment, because this is important. It is important for us to identify kung magkano yung cash flows. Okay? And kailan nangyayari yung cash flow. Kasi kapag hindi binigay ng problem yung carrying amount, ito, kung hindi to binigay ng problem, you will have to compute for that one. And how are you going to compute for that? You are going to use the effective interest rate to discount all the future cash flows. So yung mga cash flows na yun, ito na yun. You have to identify how are those cash flow or when those cash flows were made or will be made, for example. So, for the first year, ang magiging cash outflow nyo for the first year dahil annual yung payment natin ng principal will be the annual payment na 1 million. So, sabi niya, equal annual payment of the principal. So, since equal siya, 1 million. That is for 3 years. Yung 3 million na face value divide 3. So, 1 million. Other than that, nagbabayad din tayo ng interest rate of interest payments. Okay? So of course, ang interest na babayaran mo lang will be the interest on the outstanding balance of the liability. So, for December 31 on the first year, yung buong 3 million, yung buong face value ng liability will have an interest because 3 million is the outstanding interest for that period. So, 3 million yung magiging basis ng interest payment mo. 3 million multiplied by 10%, you will get the interest that will be paid for the first year, 300,000. Pagdating ng second year, ang outstanding balance na lang ng liability natin is 2 million kasi nabayaran na natin yung 1 million last year. So, we have 2 million outstanding balance. That is why 2 million na lang yung magkaka-interest for the second year. So you have 2 million times 10%. Again, interest payments, ang basis niya is the nominal interest. Okay? Hindi yung interest, hindi yung effective rate. Nominal rate, 10%. Okay? Interest payment, actual cash outflow. Okay? So, ganun din sa third year. So, sa third year, dahil nakapagbayad ka na ng 1 million yung unang year, then sa second year, another 1 million. As of third year, 1 million na lang yung outstanding balance ng liability natin. So, yun na lang yung magkaka-interest. Kumbaga, yung mga nabayaran mo na, hindi na mag-i-interest. Kung ano lang yung outstanding balance, yun na lang yung magkaka-interest. So, you will have 100,000 for the third year. So, ito ngayon yung total cash outflow ninyo each year. Okay? So, for the first year, the cash outflow will be 1,300,000, 1,200,000 for the second year, then 1,100,000 for the third year. Kung hindi binigay sa atin itong value na to, ang gagawin natin, i-multiply natin yung mga cash outflow. I-discount natin yung mga cash outflow using the effective interest rate. So using the effective interest rate, we have to identify the present value factor of 1. Okay? Of 1 ang gagamitin natin. Bakit hindi annuity? Because hindi equal yung cash flow. Mapapansin nyo, 1, 3, 1, 2, 1, 1. Kailan lang natin ginagamit yung annuity? Kapag equal yung cash flow. So, since hindi equal yung cash flow, iisa-isahin natin using the present value factor of 1. So sa first year, ang magiging N ninyo is negative 1. So, kasi itong value na to is the value that will be paid on December 31. Okay, so to bring that value to January 1, ilang years lang ang distant? 1 year lang, di ba? From January 1 to December 31 for the first year, 1 year lang. That is why negative 1. So, i-discount nyo siya using effective interest rate na 12%, pero yung N ninyo is negative 1. Tapos ito naman, sa second year, ang magiging N ninyo is negative 2. And then, ito, negative 3. Kasi 3 years na to. Ibig sabihin, you are trying to determine the value of that 1,100,000 today. Yung value niya at time 0. So, kapag ka na-multiply nyo na itong amount na to, dun sa present value factors, so makukuha nyo yung answer, yung total nila, yun yung magiging carrying amount at initial recognition. Kung hindi ito binigay, ito siya. Okay? That's how you're going to determine the carrying amount of the bonds on initial measurement. Okay? So, I hope naiintindihan niyo yun. Kung wala kayong tanong, punta na tayo dito sa amortization. For subsequent measurement. So, sa subsequent measurement, of course, we are going to record the interest paid and then the principal that was paid, okay, during the interest payment period. So, dahil given yung ating carrying amount, we have here on January an initial recognition, yung given na carrying value or price ng bonds. So, i-multiply natin ito sa effective interest rate to get the interest expense. Diba? Interest expense is equal to effective interest rate multiplied by the carrying value of the bond. Yung total payment natin each year will be your interest payment and the principal payment. Ito, total payment. So, the difference between the two, yun yung i-deduct natin dito sa carrying value ng bonds. Okay? Ibig sabihin, pwede mo actually isa-isayin. Itong carrying amount minus 1 million, add back yung amortization ng discount. Kasi di ba ina-add back natin yung amortization ng discount. So how much is the amortization of the discount? Remember, your interest here is 300 lang. 300, compare mo dito sa interest expense. Okay? The difference is the amortization of the discount. So to compute this one, to compute this one, you deduct the 1 million principal, i-add back mo yung amortization ng discount. Okay? Pero for shortcut, pwedeng ang gawin mo is this one, yung total payment less yung interest expense, makukuha mo yung total amortization ng buong bonds payable, not only the discount, yung bonds payable mismo, and then yun ang ibabawas mo dito to get this one. That is the long way. Short way, that is the short way. Long way, add back mo yung discount, i-minus mo yung 1 million na principal. Okay. So para mas maintindihan natin, let's look at the journal entry. Okay, so sa journal entry, December 31, i-record natin yung i-cancel natin yung bonds na binayaran na natin, yung principal na nabayaran natin. So, mababawasan yung bonds payable natin ng 1 million kasi binayaran natin yung principal na 1 million. And then, we have to recognize, paano mo nalaman na 1.3 ang cash na i-record mo dito? This is the 1 million plus the interest payment. That is 3 million times 10, yung actual interest paid. Okay, so 1.3. And then you have your interest expense. How did we compute for this one? How are we going to determine this one? This is carrying value multiplied by the effective interest rate. So, i-add mo, then compare mo sa 1.3, the difference between them will be the amortization of the discount. Okay? The amortization of the discount is actually the difference, diba? Sabi natin, the difference between the interest expense and the interest paid. So, ang interest paid natin is 300, minus mo dito, so you will get 48.37. Okay? So, yun yung amortization ng discount on bonds payable. Then, pagdating ng second year, 200 na lang ang interest payment natin. Ito, 200 na lang. Kasi ang outstanding balance ng bonds ay 2 million na lang. Kung magti-T account kayo, for December 31, ang ending 2000 X1, ang ending balance ng bonds payable is 2 million. Kasi nabayaran na yung 1 million. That is why 200 na lang yung interest payment. So, same sa third year. So, since sa third year, sa December 31, 20X3, yan yung maturity date ng bond. After mo ma-recognize ito, wala ka ng liability. Bayad na yung utang mo. De-recognize na yung bonds. Ibig sabihin, zero balance na siya. Okay? Any question? Okay, so walang tanong. Ibig sabihin, naiintindihan ninyo. Let's proceed sa... Yes?
None, ma'am.
Yes. Okay, sige. Yes, wala kayong tanong. Okay, so let's have zero coupon bonds. So, ang zero coupon bond, hindi siya nagbabayad ng interest periodically. So, yung interest babayaran niya at maturity date. Okay? So, ibig sabihin, magkakaroon tayo ng accrued interest. Okay? So, we have here, zero coupon bond is bond that do not pay periodic interest. both the principal and the compounded interest. So since hindi natin nababayaran yung interest, nagiging outstanding siya. And dahil nagiging outstanding siya, yung interest, nag-i-interest din. That is why tinatawag siyang compounded interest. Yung interest, nagkaka-interest. Okay? So you are the corporation will only pay the principal and the interest on maturity date. So let's have an example. So example, the company issued 10%, 3 million bonds. Meron tayong yield to maturity na, bye-bye ma'am, na 18%. Okay? So 18% ang principal, ang ating effective interest rate. Yield to maturity. Okay, so the principal and the interest will be paid on maturity date. So we have to identify first yung, mali ito itong dito. Present value dapat to. PV. Okay, so we have to identify first yung future value. Ano yung magiging total amount of liability natin on the maturity date. So, gawa tayo ng timeline. So, we have 3 years. So, this is time 0. This is January ng first year, December ng first year, December ng second year, and then maturity date, which is the December ng third year. Okay? So, we have to identify magkano yung total na babayaran natin dito. Okay? Since hindi tayo nagbabayad ng interest periodically, lahat daw ng interest kasama ng principal babayaran sa maturity date. So, dito alam natin babayaran natin yung principal. Yung principal is 3 million. Okay? Other than the principal, babayaran din natin yung mga interest na nag-accrue. Okay? Interest. Total accrued interest or interest payable. Ang problema, hindi natin alam magkano ang total interest. Okay? And sinabi niya yung interest daw ay compounded. Meaning, yung outstanding balance ng interest payable will have an interest on the next year. So, ibig sabihin, for example, sa first year, second year, third year. So, sa first year, December, assuming lang, ang ating interest payable is 100. So, to compute that, paano natin ito na-compute? This will be principal times nominal rate. Okay? Pagdating ng year 2, babayaran natin will be, kukompute natin yung interest, principal plus yung 100 na interest. Ito ngayon ang i-multiply natin sa 10% na nominal rate. Okay? Yun yung interest dito. Pagdating ng third year, yung na-compute nyo dito plus principal, yun naman ang i-multiply nyo ng 10%. So, nagkaka-interest yung interest. So, kung ganito ang pag-compute nyo, pwede naman ganito, mano-mano, isa-isa. Pwede naman, okay naman yan ganyan. Pero mahirapan kayo mag-compute niyan kung 5 years or more than 5 years yung life ng bond. So, ang gagawin nyo, para hindi na kayo mag-mano-mano compute, i-add nyo pa yung yung interest, gagamitan nyo siya ng future value factor. Okay? So, you are going to determine the value here of the interest. So, alam mo yung value dito, the value here is 0, pero over the years, magkakaroon tayo ng accrued interest payable. So, you are going to determine the future value. How much will be the total interest on the maturity date. So, ang gagamitin yung interest rate will be the nominal rate. Take note. Huwag kayong malilito. Baka mamayang gamitin nyo dito effective rate. Nominal rate ang gagamitin ninyo kasi yung nominal rate ang ginagamit to compute for the actual interest payment. Okay? Actual cash outflow. Nominal rate. Okay? So, 10% ang gagamitin nyo. Ang N, of course, is positive 3 for 3 years. Positive. Bakit positive? Kasi going to the future ka. Pag going back to the present, negative. Pag going to the future, positive. Okay? So, hindi ko na kayo tuturuan paano i-compute yung future value factor. Dapat alam nyo na yan. So, future value factor of ordinary annuity of 1 kasi yung interest natin is fixed, that is 10%, that is for annual interest, fixed siya. So, ordinary annuity ang gagamitin natin. Di ba ginagamit natin yung annuity kapag equal yung flow ng cash or cash flow. So, you are going to use the future value of ordinary annuity. Bakit or annuity, ordinary annuity? Kasi yung interest kasi nag-accrue sila every year. Okay? Hindi lang natin sila binabayaran pero nag-accrue sila every year because the 10% is the annual interest rate. So you're using this one to get the total amount to be paid. So na-determine natin the total amount to be paid will be 3,993,000. Ibig sabihin, yung 993,000, ito yung total accrued interest expense. Okay? Or total interest payable during the maturity date ng bonds. Of course, hindi pa yan yung carrying amount ng bonds. Yan yung total na babayaran mo kapag ka nang mature yung bond. Ano naman yung carrying amount ng bond this year, this time, at time 0? Initial measurement. So, nandito ka ngayon, dito tayo ngayon. Dito tayo magre-record. Date of issuance. So, to determine kung magkano yung value ng bond here, yung value niya sa future, you're going to bring that value to its value at time 0. So, ang gagamitin mo na dito is present value factor. Gagamitin mong rate is the effective interest rate. Kasi sabi ng standard, discount the bonds using effective interest rate. So, we're discounting the future value of the bonds using the effective rate. Or yung, 18% pala ito, 18%. So 18%. Okay? So you're going to use that 18% to compute for the present value factor. O bakit present value factor of 1 ang ginamit? Bakit hindi ordinary annuity? Bakit? Kasi yung total amount will be paid one time. One time lang. Okay? Sa date of maturity lang. Maturity date. Okay? So, dahil one time lang, PB of 1 ang gagamitin. Kailan nyo lang gagamitin yung annuity? Kapag mayroong periodic outflow or periodic flow of cash. Periodic cash flow. Dito, although walang actual bayad ng interest, pero yun kasi yung ng interest natin. Ina-accrue siya every year. So, we are trying to determine kung magkano yung total na mag-a-accrue since compounded yung interest rate. So, that is why ordinary annuity ang gamit natin dito. Okay? So, dito, PV of 1. So, we're bringing back the future value to its present value. We're discounting the future value of the bond. So, you're going to determine the value of the bond. So, ito ngayon ang magiging initial measurement ng bond. So, to record that one, meron tayong debit cash. So, ang i-debit nyo sa cash will be the total carrying amount of the bond. Ito, yung na-compute natin. So, yan yung price niya. Magiging price niya. Okay? Then, bonds payable na 3 million, of course. The difference between the two, that will be your discount. Any question? Okay, walang tanong. Okay, let's have the amortization table for the zero coupon bond. So since wala tayong interest payment, kasi nga hindi tayo nagbabayad ng periodic interest, wala tayong makikitang interest payments dito sa ating table. So interest expense lang. So how are we going to compute for this interest expense? Carrying value times effective rate, that is interest expense. And then, what ina-add back natin siya. Yung total ina-add back. Bakit? Because this total is the accrued interest at saka yung amortization ng discount. So, di ba yung discount kapag ka-amortize, ina-add back natin doon sa carrying amount to get the next carrying amount or carrying amount for the next period, for this year, this period, okay? So, ang composition nito is both your accrued interest or your interest payable and the amortization of the discount. So, you're going to see that sa ating journal entry. So, interest expense, this is carrying amount times effective rate. This one times ito. This one times 18% equals ito. This one times 18% equals ito. Then this one, again, 18%. You'll get 609,102. Okay, so December 31, of course, ang outstanding balance mo will be 3,993,000. Other than the 3 million na face value ng bonds, babayaran mo rin yung 993 na interest payable or accrued interest. Yung interest na nag-accrue na mga hindi ko nabayaran. So you will have a journal entry for the December ng first year. You're going to amortize the discount and recognize the interest payable. So interest expense, debit, credit, discount on bonds, and then another credit for interest payable. So itong total ng interest payable, ito yung magi-equal sa 993,000. Kung ito total nyo ito lahat. This is a liability account, accrued interest expense or interest payable. So babayaran nyo yan sa maturity date ng bond. So dito na siya mapupunta. Okay? So, ika-cancel out nyo yung bonds kasi babayaran nyo na siya, kaya i-debit nyo siya. At the same time, yung interest na nag-accrue, babayaran nyo na din. So, i-debit natin siya. Ang total niya, again, itong 993 is the total of these three. Okay? Kung mag-TT account kayo, you will see the total credit balance of the interest payable is 993. Okay? So, that is the journal entry. Then, total amount to be paid. Okay, ito na yung future value kanina na na-determine natin. That is for the zero coupon bond. Any question? Okay, no question. Okay, so we're going to end here. Magkakaroon muna tayo ng activity sa before we go to the compounded financial instrument, activity muna tayo dito up to this topic lang. So since wala tayong klase sa Thursday, hindi ko alam kung sure na yun or hindi pa, pero parang wala. Yes? Yes? Ano yun? Ano yun? Okay. So on Thursday, kung walang klase, mag-upload lang ako ng activity or ng seat work or assignment, pero ang magiging due date doon will be on next week pa, Tuesday next week. So, pero kung tapos nyo na siya agad-agad, pwede nyo na rin i-submit. So, i-upload ko yung activity on Thursday. Okay? Then, due date will be on Tuesday. So, on Tuesday, pagpapatuloy natin i-discuss natin yung assignment niyo, and then ipagpapatuloy natin yung discussion dito sa compounded financial instruments. Kasi dito sa compounded, meron din kasaling bonds dito. So, continuation lang siya ng bond, topic ng bond. Okay, sige. Any question?
Ma'am,
Yes.
isend mo yun ma'am sa classroom, ma'am.
Itong aking PowerPoint.
Yes, ma'am.
Bala ko sana isend lang siya kapag natapos na natin lahat. Pero kung gusto nyo, okay, sige, sisend ko na lang siya later.
Para
Pero
ma'am may, ano kami, ma'am, may guide kami, ma'am.
Okay, sige. Pero yung
Okay,
mga
ma'am.
okay, sige. Pero yung mga annotation, tatanggalin ko yung mga red na markings. Pag in-upload ko sa classroom. Okay, sige. Okay, sige. So, that's it. Hanggang doon lang muna tayo. I-continue lang natin next week. Okay? So, para hindi tayo masyadong madaming i-studyhan bago ang activity, mag-activity na muna tayo. So,
Yes,
assignment.
ma'am.
Okay. Sige, thank you for attending the class session. You may now leave the meeting.
Thank you,
Thank you,
ma'am.
ma'am.
Thank you, ma'am.
Okay, thank you,
Thank you, ma'am.
din.
Thank you, ma'am.